Well, this is Nancy Williamson and Dylan Williamson. We're here today to talk about extensions and estimated tax payments. Super interesting information, only because the interest rates have risen so much. The IRS has been following like the economy, and what's happening in the economy is interest rates are going up. The interest rates with the IRS have also gone up.
So what does this mean for me though? Like, I pay my, if I have a W-2 or whatever, why does it matter?
Well, it matters because you are required by law to pay in the tax you owe during the tax year. So for people who have a W-2, that happens automatically, right? You receive a paycheck for $5,000 and your net pay is $3,500 because $1,500 of that is going to the IRS and being paid into your federal income tax during the year. But for people who are self-employed, that doesn't happen because they don't receive a W-2. Or if you own an S-Corp or a partnership and you take distributions, those distributions or guaranteed payments are not paying into federal withholding either. So you have to make estimated tax payments. And that's never been that big of a deal because the interest rates have been so low. What's the history? It was like 3% last year.
Yeah.
Yeah. In 2022, it was 3%. Okay, 3%. So it really wasn't that big of a deal at the time. But then
if you had a decent investment and you were using the money, it was worth more than the penalty you were taking.
That's exactly right. That's exactly right. So that was our, kind of our go-to for years. But as of October 1st, 2023 through March 31st, 2024, the IRS sets the penalty rate, the interest rates by quarter. They're now up to 8%. So as of October 1st, 2023, the estimated tax penalty is 8%. And that's effective at least through March 31st. On April 1st, they'll release a new interest rate. So it might be 7.5%, but it's not like it's going to go back down to 3% anytime soon. It's the highest it's been since 2007.
I never knew it was that high before 2007. I kind of assumed this was like the highest it had ever been, but apparently not.
Apparently not.
Weird to think that the IRS lowers the interest rate. I'd think that was a one-way ticket up.
No. So let's talk about the big picture. The first thing that everyone needs to realize is that an extension, if you file an extension on April 15th for the IRS and for states, if you live in a state that collects income tax, that does not extend your time to pay. That's the first thing you have to realize. So as of April 15th, any amount that you owe is due, whether you file an extension or you file the real tax return. So it's really important that if you're filing an extension, that you get a good estimate and pay in what's owed as of April 15th. So that's the first thing you need to realize.
So how do I know how much I owe?
Well, you can ask your tax preparer to prepare an estimate for you and, give them your W-2, give them your K-1s, give them everything that they need to prepare the tax return. Maybe you're waiting on a K-1, or maybe you're waiting on one piece of information. Get everything else in the tax return and get a good estimate, and provide an estimate for whatever is going to come through on that K-1, for example.
What if I like to file my own taxes on TurboTax? How do I know what I need to pay in?
Same thing. Prepare that tax return to the greatest point that you can, and then whatever it tells you to pay in by April 15th. But
okay, I guess I'm asking the question wrong though. For my estimated tax payments, how do I know what to pay quarterly?
We are crossing over each other. So what I'm talking about is what happens on extensions and what happens on April 15th. We need to kind of prime the pump a little bit for paying in during the year. Okay,
so that's extensions. It's all due on April 15th. Got to prepare the tax return, get a good estimate.
Right, exactly. That's the summary of that.
So for my quarterly tax payments, how do I calculate what I need to pay in during the tax year?
You're required to pay in. I'm looking up at my notes up here because it's not something that we don't normally go this route. Like as tax preparers, there's two ways that you can easily estimate what you need to pay in on a quarterly basis. So let's talk about what the due dates are first. So for 2024, your first estimated tax payment is due April 15th of 2024. The next one is June 15th of 2024, then September 15th, and then January 15th of 2025. So that's the 4 deadlines for making estimated tax payments. So to avoid the underpayment penalty, individual taxpayers must pay 25% of their required annual payment. Okay, so if you owe $40,000, you think you're going to owe $40,000, then you should pay in $10,000 on each of those quarterly dates that I mentioned. So what if you don't really know what it is that you're going to owe? Maybe your income is very variable. And there's two methodologies that you can do. You can pay in 90% of the total tax due, which again is very difficult to estimate if your income is variable.
Yeah.
Or the other one that probably all taxpayers kind of rely on. So there's two ways that you can estimate what you're going to owe to pay in on a quarterly basis. You can pay in 90% of the total tax due in the current year, which can be difficult to estimate if your income is variable. So the second method, and the one we use most frequently to calculate what it is that you should pay in on a quarterly basis, is look at line
24.
24. Line 24 on your 1040, which is the total amount of tax that you owed. Okay, we've got to be clear that it's not just what you paid in the previous year or what you paid on April 15th. It's actually the total amount of tax that you paid in the previous year.
So if I got a refund, then that doesn't count? I don't have to pay anything in?
That's not it at all. It doesn't matter if you got a refund or you paid in. It's what your tax was during the year. Line 24 of your 1040. Look at that line. And then divide that by 4 and pay that in quarterly. If your income is above $150,000, then take line 24 and multiply it times 110% and divide it by 4 and pay that amount due on a quarterly basis. So what happens, the time that I really use the 90%, the first method, 90% of total tax due, is if you know your income is going to be drastically less. Maybe you lost your job during the year. Maybe you stopped having, you sold off one of your investments, so you're not going to have the income from that year. Then I would definitely start leaning towards estimating so that you're not overpaying. Because 110% of the tax due of the previous year is going to be a big jump up. And if your income is down, you don't want to have to just give a free loan to the IRS. So then let's also talk about after, we're kind of wrapping back around. So you pay in your estimated tax payments. How do you make your estimated tax payments? I recommend that you sign up for an account on EFTPS.gov. Okay, so it's the Electronic Filing Tax Payment System, EFTPS.gov. If you own a partnership or an S Corp, or you want to pay in for yourself individually, you need to sign up for that account as an individual taxpayer. Make it for your under your personal Social Security number. The reason why I like that system better than IRS.pay is because it tracks what you paid, first of all. So if your tax preparer comes back and says, what estimated tax payments did you make during the year, you can print out the payment history from that system, which you can't do that from the IRS website. So EFTPS.gov, make your estimated tax payments. Then you can also set up advance payments. So if you know you want to pay in $10,000 every quarter, you can set it up to just automatically make those payments for you. And you can kind of a set it and forget it kind of thing. So that's the first step, is make your estimated tax payments. So say you pay in $40,000 during the year and your actual tax due is $50,000. The total tax due. So there's a discrepancy of $10,000 that you have to pay in. That $10,000 has to be paid in by April 15th to avoid any additional interest and penalties from accruing. So back to what we started at the beginning, on April 15th, if you're not ready to file your tax return, but you know that you're going to owe the $10,000 in my estimate, you need to pay that in on April 15th to avoid then incurring the failure to pay penalties. So the first, what we've been talking about is the estimated tax payment penalties. Okay, those are the 8% that we talked about. It's an interest that they charge you. Failure to pay is a different type of penalty that happens if you don't pay what you owe on April 15th.
And what is that penalty?
So on April 15th, you owe $10,000 and you don't pay that $10,000. You file an extension. If you file the extension without making that $10,000 payment, then the IRS and the state can declare that extension invalid. Okay, so that's a risk as well. We've run into scenarios. The IRS appears to be pretty lenient about that, but a lot of the states are not. So it's to make a valid extension. If you owe, you need to pay in the amount due with that extension. Okay, so that's another reason why you might want to be sure and pay in the amount due. But if you don't, if you owe $10,000, you know you're going to owe $10,000 on April 15th and you don't pay it in, the failure to pay penalty is 0.5% of the unpaid taxes for each month. So in May, it'll be $10,000 times 0.5%. Okay. The penalty will not exceed 25% of your unpaid taxes. So that's 6 months.
It gets pretty hefty.
Yeah, that's 6 months worth of interest and penalties you're going to have to pay if you don't pay that $10,000 down on April 15th and file your tax return in October at the filing tax deadline.
So what happens if I overpay on April 15th? I don't know what I'm going to have to do because I have K-1s I'm waiting, I'm lost, I make an overpayment. What happens?
So when you file your tax return, then you get a refund. And the IRS will either refund the money to you directly, or you can have them apply it to your current year estimated tax payments. And so we have estimated failure to make estimated tax payment penalties. We've already talked about that. Interest rates change by the quarter. Currently, it's at 8%. Then we talked about the failure to pay penalty, which is you don't pay in everything you do on April 15th, everything you owe on April 15th. So that's 0.5% of the unpaid tax. What if you miss your extension or your extension is declared invalid?
I'm assuming they just lock you up immediately.
Oh, no, they don't lock you up, but the failure to file penalty is 5% of the unpaid tax per month, each month.
And you said that if I don't pay in with my extension may be invalid. So if I don't pay in on April 15th at all, I might get hit with that, even if I filed an extension, because they can deem my extension invalid
because you didn't pay anything in. And again, I think your risk is much higher to have that happen with a state than with the IRS, in my experience.
Because we don't run into that with the IRS very often, or we file for an abatement and they're kind of cool about it, but we do run into that with states.
Yeah, states have a problem with it. So best practice, file your extension and pay in everything you owe, to make sure that you don't have to pay the failure to file penalty or the failure to pay penalty. 0.5% is the penalty for failure to pay. 5% currently is the failure to file. So it's big discrepancy in those two.
So, okay, let's talk about it this way then. I'm a business owner. I own a partnership or an S Corp. It flows through to me, and I'm probably going to pay it after, maybe I have some investments in partnerships as well. They're complex. It takes a while for me to get my K-1s. I know I need to file an extension. What is all I need is a good estimate to make a payment and file my extension, and I'm in the clear. No more.
That's exactly how I would handle it. I would have your tax preparer or prepare it in TurboTax, however you do it, but put in your best, prepare your return to the best of your ability, have your tax preparer prepare it to the best of your ability, and estimate the income you're expecting from the partnership or from the S Corp investment that you've made, and pay in that amount that says due with the extension. That's the best.
So for all our
practice.
Investors out there that are going to get mad that your K-1s aren't sent to you in time, that's okay. Get an estimate and file your extension, and you'll be just fine. You're not going to incur any interest or penalties.
Well, you'll incur interest and penalties if you pay in the wrong amount, but it won't be as much, right?
Right. And it'll make your extension valid, which will alleviate a 5% penalty.
Exactly. Yeah, a potential 5% penalty. That's exactly right. My question is it 5% per month or 5% per year? Failure to pay is 0.5% of the unpaid taxes for each month. The tax remains unpaid. So it's 0.5% So annually, that would be 6%. So they're charging you basically a 6% annualized rate for failure to pay in the proper amount. If you don't pay in, there's a possibility that your extension will be declared invalid. The failure to file penalty is 5% per month. It's a big one.
That's rough.
That hurts. Yeah, 5%.
I know for us as a firm, extension season is always more stressful than deadline season because you only get one opportunity to file that extension. And if we miss it, that is, that penalty is huge. I know we always super stress ensuring every extension is filed.
That's exactly right. That's exactly right. And that's why, because it protects the taxpayer. But I think what I really want to communicate through this is that it's possible to avoid all interest and penalties with just a little effort on your part to pay in your estimated tax payments during the year. And then secondarily, make sure that you pay in any amount additionally that you owe by April 15th.
We hope you like what you've heard. Please be sure and like, share, subscribe, and follow us on Instagram, Facebook, LinkedIn, Williamson Advisors. Also, if you're an automotive shop, we have a special page called Inside Tax and Accounting for Automotive Shops. And please join our group to get updates on taxes, accounting, financial strategies, and we'd love to hear more from you.